All right. Okay, so let's make sure that the sound quality is set, is all good, and you can clearly see the picture. And we will start just in 1 minute, just waiting for the rest to join the room. So just make yourself comfortable, fasten your seatbelts, as I'm about to present you some very useful tips on how you can beat the cryptocurrency market in trading and portfolio management with automated strategies that we've developed here at Bitsgap. Okay, so David, do you still hear the echo? Because the sound quality should be fine as of now. Okay, yeah, so great. Okay, once again, greetings everyone. I hope you are all doing great, because the cryptocurrency market is rising, all is happy. And yeah, my name is Dmitry. I am the portfolio manager trader, and together with Bitsgap, we are working on the implementation of automated strategies, as well as improving the trading terminal so that you could trade from one platform, trading spot market, futures market, and managing your automated strategies. So today, let me just go next slide. So today I will be talking specifically about the spot and futures trading. So what are the key instruments that we've developed at Bitsgap that would allow you to quickly react to the market momentum so that you would enter the market at the best optimal price? So what are the tools that we have to minimize your time spent in front of the monitor? Secondly, we will talk about automated trading, which is basically my favorite topic because I have so many strategies, like ready-made strategies and configurations for you, which you can use straight away during today's webcast to launch your first bots if you have never ever launched them before. So that's going to be especially interesting for those who've never tried automated algorithms at Bitsgap, and also for those who are already been trading with Bitsgap for quite a long time. I have some new things for you as well. So yeah, that's going to be absolutely useful for all of you, regardless of your trading experience. It's going to be a step-by-step guide from me, and you will be able to launch your first bots if you've never launched them before. So yeah, risk-free trading, that's the specific topic which we're going to talk about as well. And that's the demo mode that we have at Bitsgap, which basically a virtual account, like a trading simulator, which allows you to discover and optimize own strategies. And that's like the cool thing about this is that you will be able to create like best set of strategies before risking real money. All right. The fourth topic is going to be backtesting. So that's basically the tool that we use to test any automated configuration for our bots before actually launching them, so that you could see and basically you could get some key metrics to project your future returns and to find best optimal cryptocurrency for you on which you will launch the algorithm. And of course, the risk management. There are actually 5 tools that we have for the automated trading, for spot market, and of course for the futures market. So let's jump into, and we will start with the trading terminal because with the recent update we have some cool features which I want to share with you. And we will cover here future spot trading, how to set multiple take profits. So yes, you are now able to set multiple take profits orders and to see your projected return if all of these take profit orders are hit by the market. The trailing stop loss, if you want to have a control over your profits and minimize your loss 24/7, and a buy and sell volume indicator as well, and TVAP order, the new one. So what is the primary objective of this newly implemented order? We will cover this right now. So let's go straight to the platform. So as you log in, you will notice that you have this button over here. As you click on the avatar, you have this option to switch to the beta mode, on which I am currently am. So you can actually do this in order to open this same page as I have. So initially your page looks like this. So that's trading. So as you switch to a new version, here we go. All right. And notice that in front you have the chart where you can conduct your technical analysis, and all the tools here are available. They are coming directly from the trading view, so that should be familiar to you already. On the left side you have the order book. You can manage it in any way you want. So you can only have, let's say, sell side of the market. You can have the split like 50-50% parity, and you can have the only limit buy order. So that basically provides you an overview of what is the current supply and demand on the market. You see the recent trades as well, just to get a grasp on what is currently happening on the market. So what is the buying and selling pressure, and to digest this selling and buying pressure on the market, we have created this indicator, which I call basically the buy and sell ratio. And notice that it has a period from 1 minute to 30 minutes. So this provides you an overview of who is currently takes over in the market. So it looks somewhat that the market right now is basically somewhere in the balance. So traders, they are fixing their profits as the market is rising. Well, actually, let me open BTC trading to USDT. So as I change the cryptocurrency, notice that the chart changes as well, and yeah, the period. So you see it's somewhat a parity over here. So even though the buying pressure is intense, because yeah, we've just breached the, well, that was actually yesterday, the historic resistance price of 20,000, and now we are trading at 23,500, which is insane actually. And that's why we have this 50-50 split, because some traders, they are already fixing their profits and some are keep pushing the market up. So that's why this ratio right now is changing quite rapidly. And as we move to the right side, so once we've conducted our quick analysis, so now we see what is the supply and demand and the buying and selling pressure on the market. It is about time, and of course once we've conducted our technical analysis on the chart, it is about time to make trade decisions. So that's why on the right side everything is dedicated to the decision making process. You have limit orders, and I guess there is no need to explain how limit orders work. You should be already familiar with that. Market order, stop limit with the conditional stop price or the trigger price. And we have the TVAP order. So the TVAP order, that's the brand new order that we've added to this new trading terminal configuration. So basically this order is for the purpose of spreading the risk over the time period. So let's assume you are trading some highly illiquid cryptocurrencies. It's been actually a long time since I traded these illiquid cryptocurrencies, so I'm no longer familiar with them. But well, let's assume that this ARDR is illiquid, all right? And let's assume that you possess a great stake of this cryptocurrency in your portfolio. So imagine if you would just go with the market order and you would sell all of the the large volume that you have on your balance, let's say 40,000 worth of this illiquid ARD coin, all right? So this would significantly affect the market if you would sell the whole stake at once with the market sell order. So the market would plunge like crazy because of the low volume on this crypto, and because you are basically swallow the whole demand, all right? So that's why it will most likely dip down instantly. And with the TVAP, you actually split the sell amount. So let's say you wanted to sell like 50,000 worth, and let's assume that's somewhere around this value. No, that's gonna be, yeah. So let's assume you have this amount. So in order to avoid this risk of having this deep plunge in a split of a second, you want to spread the risk over time. And sell. So you set, let's say, 6 hours. Within the period of 6 hours, you want to sell this whole stake of RRDR, and with a total of, let's say, 70 orders. So that means that per each order, it's gonna sell 11,000 ARDR coins within the period of 6 hours. So by that, you are basically gradually taking the demand from the market and gradually affecting the price of the coin itself. All right. So this tool is especially useful for portfolio managers who have large portfolios, and you have big stakes in illiquid coins. Maybe you participated in the past in the public ICOs, or well, something related to like the opportunity to get stake in those cryptocurrencies. So now you are pondering over how to get rid of this, or maybe you are willing to buy this illiquid coin. So using the TVAP, you spread the risk over time over a set of orders, and by that, your cost average, like the average price you sell and the average price you end up buying, is gonna be way better as if you would just go market buy or market sell this crypto. So that's how you can use the TVAP. Now let's proceed and let's see what else we have here. The balance over here below. Now you can see what is in your portfolio and which one has the biggest stake, and you can actually sort them by the availability, like the available amount on your balance, because it can be the case that some funds are in trades. It can be either in automated trades, so it can be the case. And let's say, you see I have Bitcoins right here, and let's assume that my decision now is to sell some Bitcoins. So instead of going over here, typing in Bitcoin and USDT, this actually takes time, all right? Instead, I just click on Bitcoin on my balance, and instantly what I get is the list of all pairs to which Bitcoin is trading. So I can instantly decide to which I want to sell or buy, and that like really saves my time. It's the matter of maybe 6 seconds, all right? But 6 seconds on the cryptocurrency market, especially when we know that it is so volatile, even today, 6 seconds really matters, all right? So that's why even this tiny improvement, it can save your time and provide you with an optimal price. Because you see, if you waste time, you may end up with the worst price as if you would like entered it before, as if you would expect it to be, because of just the time you wasted, as you've been looking for the right pair to which you want to buy or sell the crypto. So yeah, that's what I wanted to present you regarding the spot market. So notice that you can now split the take profit. So once you set the, say you want to buy Bitcoin, let's actually switch to the demo mode. Remember that the demo mode is where I have my virtual money. I can experiment with them. So that's why I have so much opportunities here to demonstrate. So let's assume a limit buy, optimal price 25%, well, actually 50%, and let's set 5 take profit zones, 1, 2, 3, 5. So it automatically arranges them in the split like 2, 4, 6, and 8%. So the gap between them is around 2%. So that basically means that you can set the take profit by the percentage, let's say 5% up, and I want to fix, let's say 10%. So here it is. Then from the entry price, 10% up, which is gonna be, by the way, it's automatically calculated. That's gonna be exactly the price of 25,800. I want to fix another maybe 30%. So that's how you set this take profit. And what I like about this tool is that you have the projected profit in advance calculated for you. So you know exactly what is the risk and return ratio for this exact trade. Because here you can also set the stop loss, let's say 3% below the entry price, which if it's like hit by the market, it's going to be minus 15 USDT. So that's the risk I am willing to take for the profit potential of 31. So in this case, the return to loss ratio is around 2. We divide the profit by the potential risk, and that's going to be 2. So that's an optimal ratio for this trade configuration. All right, because it literally makes no sense from the statistical point of view and from the risk management point of view to enter in trades where your risk is higher than the projected profit. So using this tool, you are now able to see the exact value that you will earn potentially if all of the take profits are triggered by the market price, and what is the potential loss, like what is the maximum loss for this trading configuration. All right, so make sure you take advantage of this tool and use it to calculate your return to risk ratio to see what is your potential return and risk for each trade. All right, so that's basically one of the major principles of the trading and portfolio management, when you know exactly what is the risk you take and the profit that you will earn from this trade, if you stay with your strategy, of course. So what else we have? You see, I have open orders for the bot, for some other trades as well. I'm not going to demonstrate this because just go on Bitsgap, use the demo mode and test all of these tools. Test the take profit, stop loss, trading stop loss, and get yourself familiar with this interface. All right, because here is actually nothing brand new to explain. It's just something that you have to be familiar with. Just with experience, you will get better with trading, and the time spent on your decision-making process will reduce significantly. You see, just with practice comes experience and better intuition. So yeah, so that's it about the spot market. So what about the futures market that we have here as well? So I have my futures account already linked to Bitsgap, and for this one you must have a separate API key. So you see I have API for just an ordinary Binance spot, and for the Binance futures you must have another API. So just go to Binance, create API, and make sure you allowed the in the restrictions, you edited the opportunity to manage futures contracts. So first step, go Binance. Second step, you create API. And the third step, you click on edit button and you configure the futures trading enabled. All right. And then you just take the secret and API key. And here we go. You have your futures account linked to the Bitsgap, because it really saves time when you have all of your accounts in one platform where you can manage not only your spot market as I have here, like the Binance, but the futures market as well. And notice that on my futures account, I already have some sample trades. Like these are real trades, samples opened for you just to demonstrate how it looks. So you see the entry price and current P&L. So the P&L is calculated in the like the equity equivalent, because I'm trading with the leverage. So that means that I am trading with the multiple of 20 to my margin. So that means that basically I borrowed from the exchange 20 times more to my initial balance. Well, initial margin in this case. And that's why the equity return is 617%, whereas in the USDT equivalent, it's just 31 USDT. The market price and the liquidation price here is also provided. Here you can switch to the isolated or the cross margin mode. And those who've been trading futures, you are already familiar with these terms. And just to remind you, when you use the cross mode, you like the whole balance is under the threat. So you basically risk your entire balance just to cover one trade, and that can be quite risky. Whereas when it comes to the isolated mode, you have a limited amount which is fixed, like frozen in this trade. So you will not lose more than your isolated value. And you see I have the cross trade for comp trading to USDT, and for my 0x I have the isolated mode. So you see it's the value of 45 USDT, and if I want to expand my liquidation, like to make my gap between the liquidation price and the current price wider, I just need to add some margin to my trade in this case. Or if I want to take out of it, I can remove margin from it. So why would I remove margin from my open trades? Maybe I want to open some other trades for which I require more margin, but for that, just make sure that you remove margin from those trades that are already in profit, because in this case, profit is going to be used to cover your trade as a margin. So that's something also to remember. And always monitor your liquidation price, because if you hit the liquidation price, then you pay the largest fee possible on the exchange, because that's going to be the first priority execution by the exchange. And of course you can close your trades with the market or limit orders using these buttons. I also have some open orders as a stop loss for my comp, and for my MKR I used to have this take profit, but I no longer have MKR in my positions. And yeah, so basically all information is here, like the transaction history, what is the daily fee you pay for holding these leverage positions, the trade history. So everything is here. You can analyze it to find where you made mistakes, like to analyze your weaknesses and strengths. Like maybe you are better at trading Bitcoin, just Bitcoin. Maybe you are better at trading altcoins. So using trade history, you can analyze your winning and losing positions. So what else do we have here? Well, basically that's it when it comes to futures trading. Right now it works like this, but with time we will add new features to allow you optimize your trading configurations further. For instance, the calculator, in which you will be able to calculate the maximum position size for your available balance, what will be the liquidation price if you enter the market at some price, and what if it's like goes up or down. So basically the functionality that the Binance has, portionally it will be added here just to make things easier and convenient for you. So now let's move to the next topic, which is my favorite one. That's the automated trading. And here I will not only provide you with, well, as I call them, golden strategies for the sideways market formation. And as we know, sideways market is when the market is in flat and it's the period of accumulation, basically the equilibrium between the selling and buying pressure on the market. And so I will show you exactly what is the trading configuration you can set and what strategy you should use for this market formation. Golden strategy for the uptrend using the classic bot, and some other features like why automation significantly outperforms a simple hodl strategy, and how automated bots at Bitsgap, they minimize your losses in case if the market is falling. So let's go to this section straight away. We just click on bots, and here we go. Let me open my demo account, because here I have some sample trades already open. And here you have the interface, like the chart for your bots, because it really it's the necessity for you to have this chart always in front of you, because otherwise it makes it quite hard to make automated trade decisions without the chart. That's why you have it here on the very first page. And on the right side you have the trading configuration panel, and below you have active bots history. So here as well you can analyze your sample, well, in my case that's sample trades. You can analyze like all of the trades that you ever had here. You can analyze pretty much everything, like what was the daily return for each strategy, and many other things that we will cover today. So let's basically quickly remind you what is the mechanism behind Bitsgap automated bots. So what is the strategy that our bots follow, and how they manage to extract profits consistently from the market 24/7, regardless of the market direction. So this strategy works on the rising market, on the sideways, and even on the falling market. So basically the bot is only trading within the set trading range, which is defined by the highest sell price and the lowest buy price. Within this trading range we have grid levels, or in other words, limit buy and limit sell orders. So limit sell orders, they are represented by red stripes here, and green stands for limit buy orders. So let's assume that the current price is around 11,250. All right, and let's assume that the market moves. Let me use the, no, actually I guess the only option is the pointer, which is what I don't want to have here. Okay, let it be the pointer. So let's assume that from the current price the market price rises and it hits the sell limit order at 11,500. So what's gonna happen here is that the bot will sell the base currency at that price. So it's gonna sell Bitcoin at 11,500, and it will take 11,250 to place a fresh limit buy order right below the execution price. This ensures an almost never lasting process of the bot trading on your behalf. So each time it swings up, it sells, and each time it swings low, it buys. So it buys low and sells high, and this creates this marginal effect as the bot extracts the profit from the market. So the difference here is that we took 11,500 as a sell order, and out of this 11,250 is then used to plot a new buy order, and the difference is the net profit, that's the bot profit actually, which goes directly to your pocket. And that's of course in the quote currency. So these are just samples. You see, in a matter of 1 day, some configurations are able to execute up to 200 trades, sometimes even more. So that's clearly up to the market volatility and configuration that you use. So the profit generated is in the quote currency, and that stands for the second crypto in the pair. So if you say you're trading land to Bitcoin, then in this case the bot profit generated is going to be in Bitcoins, which is something that many traders are looking for. Those traders and investors who bet that the Bitcoin market is going to rise in a long-term perspective. So that's why earning Bitcoin really makes sense. So that's how you manage it. And now is the question of what are the strategies that we have. And currently there are two strategies. The SBot strategy, that's the one originated from the traditional classic bot that we initially created, and the classic bot. So basically the difference between the two is the investment distribution logic. So when it comes to the classic bot, it buys and sells all the time the same amount of the base currency. All right. So you see the price, like regardless of the price, the higher price, lower price, it always buys the same amount. And because of that, in this case, the investment per each limit order varies. So it can be bigger investment, it can be lower, depending on the price at which it buys and sells. All right. So that's the way the classic bot distributes your investments proportionately. Whereas when it comes to the SBot, you see it has the different value per each grid level. So the amount it buys and sells, it varies, and that's because it ensures that per each grid level it spends the same investment. All right. So regardless of the price, it configures the distribution according to your balance, so that with each grid level it spends the same investment. All right. So that's why SBot strategy is better at the sideways market, and the classic bot is better at the rising market. So here is why. The SBot, you see, at the period of accumulation, when the market is somewhere in the sideways area, so it swings like crazy but stays within this horizontal price action defined by the support and resistance lines. So this is optimal for the SBot, and if you launch the SBot on the sideways market, then it will generate more profits for you than the classic bot, and that's because of its investment distribution mechanism, because it buys and sells the same investment value per each grid level within this trading range. And I can actually demonstrate you the real example. So you see the period of accumulation over here, yeah, swings, and the SBot within this period of 3 days managed to generate almost 1% in the quote currency. All right. So that was XRP trading to USDT. So the profit here in this case is in the USDT. Whereas when it comes to the classic bot, for exact same period, so you see 17th of November, over here is also 17th of November, 3 days period, but the profit for the classic bot is 0.57%. So that's because the SBot significantly outstrips the classic configuration on the sideways market. So in this case, optimal configuration for the SBot on the sideways market can be like the one I'm just about to demonstrate you. So you see, you notice that the market is bouncing off the support level, and in this case that's the horizontal support level, and it reverts from the resistance level, horizontal as well. So once you spot this pattern on the market, when the resistance and both support lines they sustain as the price swings between these levels, it's an opportunity for you to enter the market with a SBot trading configuration. And it may look like this, where you have 50% of your sell orders up to the resistance and 50% of limit buy orders below the current price, because you expect the market to swing between these resistance and support lines. So you want to provide your bot with these opportunities to buy on a short-term falling market and to sell on a short-term rising market as it bounces and reverts from these levels. All right, so in order to set this configuration, and by the way, don't forget to put this stop loss levels around here, so that's going to be 3% below the support line, because once the support is breached, then in this case it means that the pattern that you recognize, like this one on the market, it just did not sustain. All right, so support did not sustain and it fell, and that's why you want to minimize your loss here, and that's why your stop loss should be around minus 3% from the support line. So that's somewhere over here. Let me show you exactly how you create this configuration. So you go here, and let's say we want to trade Ethereum to USDT maybe. So you see, automatically the system assigns you the trading range, but you can configure it in any direction you want. So you can just drag the upper price, and by that you reduce the amount of sell orders. You can drag the lower price higher, and by that you reduce the amount of buy orders. All right, and you can manipulate your trading range as you want. Notice that the fewer buy orders you have, the more of the base currency in this case is going to be required to launch this bot, because in order to sell all, in order to execute all of these sell limit orders, you must possess enough of the base currency on your balance, right? And that's why notice that the investment here value is calculated accordingly. So you need 1.29 Ethereum to set all of these sell limit orders, and only 200 out of a total investment of 1,000 to cover your limit buy orders. If you change the balance, like let's say you have fewer sell orders but you have more buy orders, in this case notice how the configuration changes. Now remember, you needed only 200 USDT to cover your buy orders. So now as your buy side is wider, you need 872 USDT and only 0.3 as a base currency to let the bot execute all of these sell limit orders. So that's how you configure your trading range, and you can actually do this manually as well by typing the lower price and upper price, but for me it really takes less time when I just drag the upper price and lower price in the direction that I actually need. So let's continue here. So once now we learned how to set the trading range. Now the big question arises. What is the grid quantity I should use for this configuration? So here is where you set the grid quantity, and remember that grid quantity stands for the amount of limit sell and limit buy orders in total. So you see the frequency of these orders distributed. Notice what happens if I reduce it, let's say, to 20. Now you clearly see the gap between these orders. So that's because in this trading range now I have only 20 limit orders. All right, so that's around 10 sell orders and 10 buy orders. When I reduce the amount of grid levels, then my grid spacing becomes bigger. So that's basically what stands for the gap between my limit sell and limit buy orders. So over here you see the gap between your limit buy orders. It's exactly around this number. And by the way, the fee which you have to pay for each limit order by the exchange rules is also already priced in this percentage. So it's already taken into account. All right, so we already pre-calculated it, and this fee is priced in. So even though in reality the grid spacing is around 1.3, I guess, since we have to take into account the fee as you have to pay for each limit sell and limit buy order as you sell or buy, it is priced in, and that's why it is 1.23. So the fewer grid levels, the bigger is your grid spacing, and the higher is the marginal profit, of course. All right, because the space between the price you buy and the price you sell is bigger. Whereas when you set 100 grid levels, of course your grid spacing is going to be reduced to, in this case, 0.23%. So in this case the marginal profit is 0.23%. But this effect of a reduced grid spacing is offset by the fact that you have 100 grid levels instead of 20. So that means that with 100 grid levels you will achieve the higher frequency trading. All right, so as your orders are so tightly located to each other, so they are so close from each other, so that means that the bot is able to capture almost any tiny market move. All right, so that's because of the grid spacing that you reduced. So the big question is, when should I have more grid levels and when should I have fewer grid levels? Well, if you are trading cryptocurrencies that are less volatile compared with other cryptocurrencies, then it really makes sense to trade with more grid levels on those cryptocurrencies that have reduced volatility. Because in order to seize market swings that this reduced volatility crypto creates, we must provide enough of the grid levels, so that's why they must be so tightly located to each other. Whereas when you see that the crypto of your choice moves like crazy, and let's say in a day it can upswing, let's say 20%, and then next day it can go down 15%. In this case, you can play with fewer grid levels to increase your grid spacing, because this market movement potential of 30% up and then 20% down is enough to basically justify your configuration of fewer grid levels. Whereas when, let's say, crypto moves in a tight corridor, let's say, actually this is a bad art that I'm demonstrating here. So let's use another tools. Remove all drawing tools. Let's use this forecast. So when your market moves, let's say 2% in a day, and then next day down another 2%, well, this is quite a low volatile crypto, and in this case you can have more grid levels to ensure that you monetize on these tiny market swings. And since you have more grid levels here, this fact offsets the reduced grid spacing. So in the midterm and long-term perspective, you still end up with a decent return, regardless of whether you have 100 grid levels or 20 grid levels. Still, in the midterm perspective, you end up with decent returns. Like on average, you see, so for example, ING trading to USDT, that's the one I have. 27 days passed, and it has managed to generate 24% for this period, all right? And here I have 100 grid levels. So that's basically how you see that regardless of the configuration, it's just a matter of the volatility of your selected crypto. If the volatility is not enough, then stick to the amount of grid levels from, let's say, 80 to 120. Whereas if you see that the volatility is enough and the market moves like crazy, then 20, 30 grid levels would be enough to generate consistent profit inflow from the market. So what else should we cover here? So let's go back to the configuration of, let's say, 50 grid levels. And of course, the more grid levels you put here, the larger your investment should be, because for each grid level there is a minimum investment required by the exchange, but everything is already calculated here for you. And even if you don't have enough of the money to initiate this trade, then you will be notified by the system, like you see over here. I want to launch the bot with 180 grid levels, which is the maximum, with only 1,000 USDTs on my balance. So this is clearly not enough, and that's why you should either increase your balance to this amount over here, which is displayed, or you can adjust the grid quantity. So having only 1,000 USDT, I can open the configuration with a maximum of only 81 grid levels. So notice if I increase, you see, recommends me to insert more money in this case, but if I reduce, then still possible. So the maximum for this amount is, and for this setup, for this trading range, and for the amount of grid levels, that's the enough money that I have here. So make sure that before you launch your bots, you double check your balance to see which crypto you can trade, what is the available amount that you have, and then just go straight and start configuration. Let's go back here to this configuration, 50-50%. So that's the optimal one when you spot the sideways formation and launch it on a SBot strategy, as it significantly outstrips the classic bot on the sideways market. The way I check this is using the backtesting. So if you don't trust me, for example, let's assume you don't trust me, then you can use the backtesting. And let's say you want to compare the SBot and the classic bot for a certain period. So let's check what would be the performance from that point, 11th of December, up to the, let's say, 14th of December on Ethereum. So SBot 180, we set the date range 11th to 14th. So the profit would be only 0.14% on the SBot configuration. Now let's compare with the classic bot on this same period. So you see, well, maybe not the best example, but let's use maybe another one, just to use larger numbers. Let's say Zen to Bitcoin. So let's use actually this period from 14th to today. So the SBot on this sideways formation with 180 grid levels, 14th to 7th. So that's 0.63%. And now let's check the classic bot for the same exact period of time. So yeah, you see the difference over here. So that's the way you can use the backtesting tool to compare configurations on different market formations. So as a rule of thumb, you see on this sideways formation, as the period of accumulation, SBot outperforms. So you see 0.9%, it outperforms the classic bot 0.57%. And the best way to actually trade these patterns is when the trend is rising. So most likely, because from this statistical perspective, it has proven to be more successful, that the outcome of this sideways formation is that the market breaches the resistance and goes higher. So that's why it really makes sense to trade with configurations that I provided you with on the upside market, because most likely the breach is going to be at the resistance. And if you even have your trailing up instrument on, which is the one over here, it allows you, basically it allows the trading range to follow the market rise. You end up with even higher returns in this case. You see, it acts like the outcome is a rising market over here. It reverts back, but still, you see, next sideways formation over here, and the outcome is that the market then keeps rising even higher. So in this case and in that case, both scenarios, the market breached the resistance line. So if you had trailing up instrument on, then your return would be even bigger. So let's go next. And by the way, this is the example of how SBot strategy, basically automation, outperforms an ordinary hodl strategy. So if you would just simply buy the crypto at this price over here where I have hodl, and you would hold it up to current price, you would be only up by 5%. Whereas with automation, with the SBot, your profit would be 14%. And that's because you let the bot to generate these profits on these market swings as the market was rising. So compare 5% with 14%. Clearly, automation significantly outperforms an ordinary hodl strategy. And by hodl strategy, I mean when you just buy the crypto and you then do nothing about it. So it just stays in your portfolio and you hope that the price is going to rise. Why would you waste your time? Why would you waste the potential of your crypto if you can use automated bots which take your crypto to generate even more returns for you? So on this swinging market, it extracts profits as it buys low and sells high each time the market swings, and you end up with a bigger return as a result. So clearly, automation here is on the sideways market formations, outstrips an ordinary hodl strategy. So what about the classic bot? Well, the classic bot is the best solution if you expect a significant rally. So if you expect that the market is going to rise like crazy soon, then it makes more sense to launch classic bot. So here's the example where I compare the performance of the SBot and the classic bot on the same time period, on the same crypto, and on the same period of time. So you see, 4-day period, that was XRP trading to USDT, and the profit was 53% on this rising market for XRP. Whereas for the classic bot, you see, the same period absolutely, same crypto, but the profit here in this case is 70%. So compare 70% with only 53%. So clearly you will spot the difference that the classic bot outstrips the SBot. And that's because of the investment distribution logic that the classic bot has. Because as the market is rising, the classic bot buys, like, it invests more with with the rising market, because the price increases, and remember that it buys the same amount of the base currency regardless of the price. So clearly when the price is rising, it is now higher, it is now expensive price, and at that expensive price it buys the same amount of the crypto, and you end up with the larger investment. Compare with those investments that you had when the market was trading before the rise. All right, so as the market rises, it spends more, it invests more in this case, and you end up with bigger returns. Because on the rising market, you are not only affected by the profit generated by the bot, as it buys low and sells high each time you provide it with, like, basically the market provides the the classic bot with these opportunities. You also see that the value of your base currency increases because the price of the base currency is rising, and that's why since the classic bot it spends more with the rising price, you end up with bigger return. So that's what I call an active investment change, when you not only generate bot profit, but the value of your base currency also increases. So that's the value change plus the bot profit in this scenario. So that's exactly what happens underneath the mechanism of classic bot. It not only buys low and sells high, it invests more with the rising price, and the value of the base currency, as the bot buys more, of course it affects your investment significantly, and you end up with a better return compared with a SBot strategy. All right, here's the optimal configuration for the classic bot. You see the rising market, so the trend is clearly rising because lower low is now higher, and the higher high is also higher. So you see angled up resistance, angled up support. Clearly the market bounces off the support and reverts from the resistance, but each time it rises, it establishes a new higher high, and you see the exact pattern formation. It actually derives from the original market, from the Forex, from the stocks market, from the ETFs market. So from the statistical perspective, nothing is new at crypto, all right? All patterns, they derive from the traditional market, and that's why we can take advantage of the statistical analysis to find those patterns on the market to take advantage of. So once you see this pattern formation, you can, the optimal price would be to enter somewhere at the area of support line once you see the bounce off. Because, for instance, in this configuration, I would enter the autobot trade once I see successful bounce off. So not at that point when it approaches, so it falls to support, but at the point when it has already bounced off the support level and the price rises a bit. So somewhere at around that point, I would have entered the market. And over here, you see bounce off, and this bounce off is a sort of confirmation for you that the support line sustained, and that's why it really makes more sense from the risk management perspective to enter the market when you see a confirmation that the support line sustained. So you see now the market price is over here, and once you see it falls to support and you see the bounce off exactly like over here and over here, you can enter the market with this configuration. You set the buy side like this and wider sell zone, because the potential of the rising market is almost unlimited here. So that's why you have a wider sell zone and a narrow buy zone, because even though the bounce off has occurred, you still may expect that there are chances that it will revert a bit back and then bounces off again. So that's why you provide the bot with this still with this opportunity to buy if instead of instantly rising, it's gonna fluctuate over this area. So that's why you have these buy limit orders to cover your position, so they will just buy at optimal price and you end up rising, and the cost average effect is gonna provide you with decent returns here. And of course the stop loss is gonna be below the support, somewhere over this area. So that's the optimal configuration, limited risk, because from the entry price down to the stop loss, the projected loss and projected return, of course here the return exceeds the projected profit loss, and that's why this configuration is the one that you can already use once you spot this pattern formation on the market to trade. All right. So maybe the last thing that I want to cover is how to let the bot to automatically follow the rising market. Because remember, at the very beginning I explained that the bot is only trading within the trading range, right? So if it goes below the lower price, then the trading halts, and if it goes above the upper price, the trading also halts. So as far as the condition of the market price staying within the trading range is met, then the bot is gonna trade. But what if I expect the market to rally significantly? So this is my initial configuration. So what if I expect the market to move like this, and then bam, it just breaches the resistance line? So what if I still want to participate in this market rally? In this case, you use the trailing instrument, because with this instrument, you basically let the trading range to move together with the rising market. So it's gonna be adjusted accordingly. So you see, let's say the price is now trading over here. So your range is gonna move upwards together with the rising market. And here's the example. You see, initial trading range. What if new higher high is established? In this case, with the trailing up instrument on, your trading range will follow the market rally. What about new higher high? Same, it just follows the rising market. But what if from that point the price falls and breaches the support line? In this case, the trading range is gonna stay where it stayed before this plunge, because the tool is named, well, it's now only trading, but it used to be trailing up, and the functionality of it is just to follow the rising market. And that's why when the price falls, it doesn't follow the plunge. And that's why over here is the area where the bot is not able to trade. But what if the price then reverts back to the trading range? You see, the trading continues. So as far as the price stays within the trading range, the bot is able to trade. New higher high, you see, the trading range goes higher accordingly. So that's the way it works. And that's the example of NG trading to Bitcoin. You see, my initial trading range was at this area, and once it breached the resistance line, my upper price basically, notice that my bot continued to trade on this market rally. That's because I had my instrument, like trailing instrument, on. But what if I forgot? What if it breaches the resistance, but I forgot to switch my trailing instrument on? Then what you will see is something like this. You see, it was rising, and as far as it stayed within the trading range, it's been trading on your behalf. But once it breached the resistance, it just stopped trading, because it is no longer in the trading range, and you did not provide it with this functionality to follow the rising market. So make sure that if you want to spend less time in front of the computer, and if you want to let your bot to follow the market rally 24/7, because the resistance breach, because like the crazy upside movement can occur at the time when you are sleeping, for example. So that's why using this trailing instrument, you provide the bot with the opportunity to follow the rising market 24/7 on your behalf. All right. So I see some people are asking for the Russian translation. Well, actually, yes, I make webcasts on Russian language as well sometimes. So yeah, stay tuned. For sure, you will see this webcast in the future on Russian language. So you are asking me that trailing up works only with classic bot. Well, that's not. It works with the SBot as well, you see. But the idea of what I'm trying to explain here is that on a rising market, the best performance is achieved by the classic bot, you see. And that's why if you expect the market to continue the rally significant, like you see the one happening right now with the Bitcoin, it's already up by 3,000 from its resistance of 20,000. So that's clearly a rising market. And if you would have entered this market with the classic bot, your performance would be bigger than the SBots. So for like the rule of thumb here, if you expect the market to rise heavily, choose the classic and make sure you have a trading up instrument on. If you expect the market to move sideways for some time, like, let me show you the example. Where is it? So if you expect the market to move sideways a bit, because you see this phase occurs then after a significant rally, there will be accumulation because market buyers and market sellers, they are going to fight for the equilibrium price on the market. So that's why you will see these scenarios. So once you spot that there is an accumulation on the market, you can take advantage of it. You launch the SBot, you set the trailing up. Why would you set the trailing up? Because you spot this sideways formation on a rising trend, because you spot it on the rising trend, there are more chances that you will end up saying that the price breaches the resistance instead of the support, so it will continue the rally. So once again, if you expect the sideways formation, you set the SBot trailing up, and you set the trailing up because you expect that it will breach the resistance and will continue the rally. So like in these scenarios, you see sideways, the SBot would have generated more profits here than the classic bot. But since you want to participate in the whole market movement and you expect the market, like you expect the trend to continue, then with the trailing up instrument on, out of this sideways formation, you will end up letting the bot generate profits on this rising market because you have this trailing up instrument on. Otherwise, if you just set SBot without trailing, the trading will halt as the price breaches the resistance over here. So that's the idea, all right? And it really comes with the practice, and that's why we have the demo mode here for you, so you can experiment with all of these strategies. So use them straight away, like those that I provide you with. Just get yourself familiar with them, try them, and you will see the results. And by the way, these are not the only patterns that you can find. There are actually around 40 patterns that exist in the technical analysis, but just from my trading perspective and experience, these are like golden patterns. They worked well on the cryptocurrency market. So the rule of thumb, remember that the trend is your friend, and once you expect on this rising trend that there is gonna be a sideways phase, then you can enter this market with the SBot, because you remember that the SBot is the best solution for the sideways phase, and you set the trading up because you expect the trend to continue. All right. If you do not expect the trend to continue, then makes no sense to set the trading up. But still, it basically, from my perspective, it always makes sense to set the trading up, because why would you skip this opportunity of having your bot trading on your behalf if the price breaches the resistance line? All right. So we've stayed somewhere over here. So yeah, that's basically the last one I want to show you. How automated bots minimize your loss if the market is falling. So assume you purchased the base currency where I have my hodl pointing at, and then the market falls down to that level, so you end up in a minus 6.88% of a loss. So that's a simple hodl strategy. You purchase base currency, you spend some time, now you see it is trading below the entry price, you are minus 6.88%. But if you would have entered this if you would have traded quantum with automated algorithms, either the SBot or the classic bot, you would see that the the loss would be significantly lower. So as the bot was trading on this market swings, as the market was falling, you see, still, even on the falling market, there are opportunities to buy low and sell high. And that's why the bot profit generated on this falling market, it offsets this whole negative value effect of a falling market. And that's why you end up with only a minus 3.18%. So the profit generated by the bot, it offsets the falling value of quantum. And that's why it really makes sense to trade with automated algorithms, because even on the falling market, they can minimize your loss. All right. So that's the way it works. And if hopefully the market reverts from that point and goes higher, you see all of these sell limit orders, they will be executed, and they will offset not only the investment change to 0%, but you will end up, if hopefully it rises even higher, your investment change would now be in the positive zone. So here this is what I call the cost average effect, because your investment is split by all of these limit orders, so you never buy the whole stake of the crypto at one price. It's spread over the limit orders. So that's why as the market is falling, it keeps buying, but with a lower price. And as the market is falling, it has these opportunities to sell sometimes as it swings higher. Eventually, you see all of these tiny swings. So that's why it generates profit in the quote currency, and that's why this quote currency profit offsets the entire negative value change as the value of the base currency depreciates. So that's how it works. So what we've learned today is that on the rising market, we're gonna stick with the classic bot, because we clearly see that the classic bot outstrips the SBot on the rising market. When you expect the market to move sideways before it breaches the resistance and goes even higher, you would stick with the SBot strategy, the one which is set over here. And what you've also learned is that even on the falling market, bot profit, it offsets the negative value change as the base currency is falling. So this is clearly another proof that automation outstrips a simple hodl strategy even on the falling market. So it really makes more sense to let bots use your crypto to generate and to manage your crypto to generate profits, compared with the simple hodl strategy. All right. Because it is fully automated, you don't have to stay in front of the computer and worry about your return, and it always extracts profits which go directly to your pocket. So you see, for instance, over here, waves to Bitcoin, you see all of this profit generated. And by the way, that's the daily return over here. Let's see if we have still time. Well, actually, let me spend 2 minutes more to explain you this. So not only you can see by clicking on view the daily return, and as you click on it, you can estimate what is basically the average return on a daily basis that you can expect. Just looking at this chart, you see, so it's somewhere around the average of what you can expect is, well, this value. Let's look at another one. Let's look at something trading to USDT. View. bot statistics. So you see the average is somewhere around what, $30. So using this configuration where you have grid spacing 0.32, investment 2000, ING trading to USDT, next time if you would like to once again enter ING trading to USDT with the pretty much the same investment, you will remember that at that time in the past when you had for this trading for this crypto you had configuration of the grid spacing 0.32, and that's actually was what, 100 grid levels in total. The bot has managed to generate on average 30 USDT on a daily basis. All right, so that's something. It's not 100%, of course. I mean, it's just from the statistical perspective, the expected return that you can get just looking at the chart that we have here. Of course, you will spot anomalies, this mean deviation, because you see over here at one day it was 156 USDT. So that was because of an extreme volatility that occurred on this crypto at that day. But on average, like gradually, you look at the chart, you see around 30 USDT you can expect from this configuration. So once again, next time you would like to launch the configuration with around 2000 as we have here for ING, with grid spacing 0.32 and grid quantity of 100 on this same crypto, expect around 30 USDT just based on past performance. All right, so that's the way how you can use bot statistics, which is a pretty useful instrument that we have created here. So all the metrics are provided. You can analyze what is the amount of the base currency which affects your portfolio right now. For instance, BitTorrent trading to USDT, you see I have quote currency in open orders and I have base currency in open orders. So that's exactly what I possess right now as the base currency. So that means that right now 166 BitTorrents, they are being affected by the market movement as the price of the market on the market swings of BitTorrent. And I have the quote currency here, so that's my balance which is gonna be used if the price falls. This is my basically what you see when the quote currency is in the open orders, it's the value in your limit buy orders. You can check that in open orders here. Side buy, you see the price, the amount that will be spent here. So if you multiply the amount by the price, you will get the exact investment sum that will be spent on this price level to enter the position. All right, so that's basically it. Make sure you use the demo mode to experiment, to discover strategies. Make sure you use the backtesting tool to find optimal cryptocurrencies for you just based on the past performance. So let's say you want to know what is the performance of Zen trading to Bitcoin for the period of last month. So that was 17th of November until today. You get the exact value. Oh, actually not the one I wanted. Once again. So yeah, for this period 50%. You look at the chart, you see that that was generated on somewhat, initially it was a rising market, then you end up falling market 50%. So I mean, using this tool you can create your expectations. All right, so it doesn't mean that it is guaranteed that next time, let's say if the market will move this same way, moves crazy and then you see falls, that it will generate 50%. But at least now you see that if it will repeat this market movement, then around 50% is somewhat what you can expect for the period of 30 days. So that's the way of how you can use the statistical tool backtesting to compare cryptocurrencies with one another to find optimal for you. And of course you can backtest various configurations. Let's say you want 100 grid levels, you want to see what would be the performance with only 100 grid levels for the SBot, or let's say for the classic. So everything you can check in backtesting tool, you can compare to find what are what is the best strategy on the rising and on the sideways market. Well, actually I already did that for you because I know that classic bot is better on the rising and the SBot is better on the sideways. But still, You don't have to trust me. You can use all of these tools here that you have at your disposal to find it out by yourself. Which one, like which configuration and which strategy is better on which crypto and on which market formation. So let's see if we have any interesting questions before I end this webcast. Okay, so how to set up what would accumulate altcoin. So that's pretty easy. You look at the cryptocurrency pair in which the base currency, the quote currency is altcoin. So for example, BTC trading to USDT, that's not the altcoin, that's USD, all right? But if you are looking at something like BNB trading to BTC, then in this case, you have the crypto trading to the altcoin. And that means that the bot profit generated is going to be in Bitcoin. So if you have BNB and you want to use this BNB to generate profits in Bitcoin, then this pair is what you are looking for in this case. But be aware of the fact that quite many altcoins that are trading to Bitcoin, they are now falling because Bitcoin right now is the first priority investment. All right. But it's not always the case. You can still find those cryptocurrency pairs where you can earn the altcoin which is actually rising. All right. But it really takes time to find those cryptocurrency pairs. If you, by the way, don't know which crypto pair to trade, use recommended strategies over here. These are all of the top, like the list of top performers based on the backtest results. So on Zen trading to USDT, the bot for the period of last month managed to make 142%. It doesn't mean that next month it will repeat this same success, but at least you know that there are traders that are actually trading this crypto, because otherwise the bot wouldn't have managed to generate this insane return. So that means that at least these top cryptos here, they are highly liquid. Market players are trading it, and that's why trading these cryptocurrencies on automated bots makes sense. So yeah, use this list to find some interesting cryptos in, let's say, Waves Bitcoin. In this case, you will earn in Bitcoin, but also remember that the base currency also affects your investment, because the price of the base currency always swings up or down. So that's why in any case your investment change is going to be affected. So the bot profit is always positive. All right, it's the marginal profit from the market, whereas the investment change is the key metric that you should monitor, because it provides you with an overview whether you are up or down to your initial investment. So for instance, my AG trading to Bitcoin, it is down by 12% because it fell significantly. All right, so even though the bot was making profits here, I'm still in the minus zone. By the way, you want to know what would be the difference if I would just buy this and hodl it down to current price? You will use this tool, forecast, from that point where I started down to current price. Well, if not the automation, then I would be minus 23%. But thanks to automation, I'm only minus 12%. So you see an obvious effect of how automation minimizes your losses on the falling market. So yeah, if you have some questions left, then feel free to ask them here in the support room, or you can go to the Telegram chat that we have to ask your question, and the community of our supporters and traders or portfolio managers, they will gladly provide you with their useful tips and clues and what they think about the question that you are wondering about. So yeah, I hope you liked this webcast and the information provided was very useful to you. You can find articles at Bitsgap as well. On the main page, you go to blog, and you see these are all articles that I am writing for you. Well, not all of them, but those related to automation and some strategies, they written by me. So you can use this as a guide in front of you when you are looking for configurations and how to set. You see, a step-by-step explanation here is also provided. Use this as your guide tool. All right, so thanks a lot. I appreciate, and I hope you enjoyed it. Use the demo mode, use the backtesting to experiment before risking the real money. And I see you next week. Bye and have a nice day.